Guys, so in this video, I wanted to talk to you about an insanely profitable NAS 100 trading strategy that if you follow strictly for the next 90 days, then you'll be able to quit your job and become a full-time profitable trader. Now, these aren't baseless claims that I'm making because as we can see right in front of us, we have data from 169 trades collected in well over 15 months worth of data that shows us that this strategy has a 61.54% win rate, which in itself is incredible for a trading strategy. And it is such a simple thing that you won't have to spend more than an hour of your day behind this strategy, and then you can go on and get on with the rest of your life. Now, we're going to be breaking down exactly how to go through this strategy. We're going to take a look at the analytics so that we can understand exactly what makes this strategy incredibly profitable. And I've also got a checklist that sets out the rules for this trading strategy along with a nice plan that we can follow in order to frame up a high quality trade. So let's jump straight into the video, and we'll start off by really analyzing the data that we have in front of us so that then we can jump onto the charts and take a look at some examples so that you can then go onto your charts from next week and start taking these trades straight away because you have the data behind you backing it, showing you that it is a profitable trading strategy. So let's jump straight into it. And first of all, let's come down here and take a look at the performance since January 2023 all the way up until March 2024. Now, that is 15 months worth of data. And as we can see in the entirety of 2023, the trading strategy came out with a 53.78% win rate, which is incredible in itself because if you had a $100,000 trading account, then at the end of the year, you would have been able to make $53,000. And now that in itself is a yearly salary, right? That is something that you can exchange for your 9-to-5 job, and you can just do this instead and be a profitable trader. Now, as we take a look at the different months, we can see that some months are higher than others. We have one losing month out of the entire year. However, as we can see, a 6% gain in January more than makes up for the 0.91% that we get in February. And then the same thing in April, the 10.4% that we get in April well and truly makes up for the 0.31% that we get in May. Now, it's a very similar story. We have these really high months where if you were trading on, say, a $100,000 trading account, in July, you would have been able to get a payout of $9,400. So even if in August, you then had a negative $3,000, you've still made tons of money in the previous month to tick you over until September, where you can get another $2,600 payout. So it just goes to show that with the power of funding, along with a profitable trading strategy such as this one, you can make incredible amounts of money and become financially free. So having said all of that, let's jump straight onto a chart so that we can figure out how to trade this strategy. So here we have the rules for the strategy. So number one, we have no higher time frame bias or POIs. So we're not going to be taking into account any of the higher time frame bias. We're not going to be looking at the 4-hourly or the daily or anything like that to figure out what kind of trend we're in. We're simply just going to be moving on past that. Now, the second rule that we have is once we're up 2%, we're going to take half off of the table and we're going to move the trade to break even. The next rule is that we have no time restrictions. However, we do not take a trade after 3 p.m. UK time. Number 4, we have to take a 5-minute market structure shift, not a 1-minute market structure shift. Number 5, we have the entry on the fair value gap or order block that created the market structure shift. And number 6, we have to take a minimum of a 1-to-1 risk to reward. That means for every 1% we are risking, we are going to be getting a reward of 1%. Now, let's jump straight into the trading plan, and it is nice and simple. The first step is to mark out our Asia highs and our Asia lows. So if we come onto our charts, what we're going to be doing is marking out the Asia high, which is in this case right here. And then we're going to be marking out our Asia low, which in this case is right here. Perfect. So that is our Asia high and that is our Asia low. Now, to figure out your Asia high and low, all we're simply going to be doing is taking the time between midnight UK time and 7 a.m. UK time. So let me just add that on here. What we're going to be doing is marking out the Asia high and low between the times of midnight and 7 a.m. UK time. Now, mark this out according to your time zone. So if you are in Eastern Pacific, then just figure it to your own time zone. But because I'm in the UK, I'm going to be marking out the times between midnight and 7 a.m. UK time. Now, to make my life a little bit easier, I use this indicator called the Asian Session Range. And all this simply does is it marks out the times between midnight and 7 a.m. for me so that I don't have to come onto my charts and draw out these lines. It simply just colors in the background blue so that way I know that I am within the Asia range. And then when we come out of the Asia range, I'll know because we will leave this blue cloud. So by all means, if you want to use an indicator, then do so. However, I would always recommend that you figure out how to do this yourself so that if you do ever end up not having an indicator, you're not stuck. It is very simple. Mark out the times between midnight UK and 7 a.m. UK time. Now we go back to our checklist, so we have done that. Our next step is to wait for a sweep of either the high or the low of the Asia session. So now all we do is play price on until we get a sweep. And there it is right there. So what this means is that we have now swept the Asia low. So perfect. We can now come over and tick this off our checklist. Our next step is to identify a 5-minute market structure shift. So again, all we're simply going to be doing is just waiting for price to give us a market structure shift. So let's continue to play price on and let's also annotate where we are in terms of structure. So there is our higher high and there is our higher low. We have this structural point right here. So now if we were to see a market structure shift, we would want this high to break right here. So let me move this back just a little bit so that we have a clearer chart. And here we go. So we want to see this high get broken, and if price closes above this, then I'm actively going to be getting involved in this trade. So we're still waiting to identify a 5-minute market structure shift. So let's play price on, and boom, there we have it. If we zoom in, we can see that price closed above this high, which means that this is a valid market structure shift. Our next step is to move on to the next part of our checklist, and that is to take our entry on the order block or fair value gap that created the market structure shift. So if we come down to the 1 minute, what can we see? Well, right here we can see that this fair value gap is what caused the markets to give us this market structure shift. Therefore, what we would do is we would put our entry at the open of this fair value gap. And then if we come up to the 5 minute, we're going to put our stop loss just below the low. And then all we're going to do is we're simply going to target the opposing liquidity, which is the Asia high. So once we do that, we can see that this is a beautiful 1 to 2.2 risk to reward trade. So now we can come back to our checklist and tick this off. Our next checklist criteria is that we need a minimum of a 1-to-1 risk to reward. So we also have that because this is a nice 1 to 2 risk to reward. Our next step is to go a break even after we get a structural break. So for that, we now have to simply wait to see if number 1, we get tagged in, and number 2, if price starts moving in our favor. So if I play price on, we can see that there we go. We get this beautiful tap straight in, and then price starts moving away. Price comes back down, but again, it rejects, and there it is. Explosive move straight up towards our take profit. And again, if I continue to play price on, we can see that very beautifully price just climbs straight to our take profit. So if we take a look at how long this took from the market structure shift all the way to our take profit, it took an hour and 10 minutes. So as we can see, all it took was a couple minutes on the charts to frame up this trade. So it took us around 35 minutes to frame up this trade, and then an hour for the trade to hit TP. So less than 2 hours, and we've managed to secure 2.2% gain on our account. And all we did was take profit at the opposing liquidity. And it is as simple as that. So that was a perfect example of a great Judas swing trade taken on NAS 100. So I hope that gave you some clarity as to how we're going to be identifying and framing these trade setups. But for the time being, let's go back to the analytics of this trading strategy so that we can dig a little bit deeper. As we can see, the average risk to reward that we're getting per trade is around 1 to 1.35, which is great stuff. The max risk to reward is around 1 to 4, which is amazing because for every 1% we're risking, we're getting back 4%. That is amazing in itself. So the total number of winners that we've had out of 169 trades is 104, and we've had 65 losses over the course of 15 months. That gives us a nice 61.54% risk to reward. And what this also shows us is that the max losing streak, and just remember, losses are going to happen. They are inevitable. This strategy has a 61% win rate. Therefore, out of any 10 trades that you take, 4 are definitely going to be losers and 6 are going to be potentially winners, right? That is how we frame up a 60% win rate. And as we can see, the max losing streak that we went on within this 15-month period was 6 losses in a row. And the max win streak that we went on was 13 in a row. So double the losing streak, which is, again, amazing in itself. So as we dig a little bit deeper, this is the breakdown from January all the way to December, showing us that there are going to be multiple days where you don't end up actually taking a trade. Now, this can be for multiple reasons. It can be that you get the market structure shift after 3 p.m. Now, if you get it after 3 p.m., we don't take a trade. It can be that you don't get a minimum of a 1-to-1 risk to reward. Now, if that happens, again, you don't get a trade. However, once all of these rules are met and we follow our checklist and we're able to tick all of these off and we frame up the trade, then we can actually execute. But as this shows us, there are going to be a number of days, multiple days, where we're going to have to simply just sit and do nothing. We can spend time with our family, we can go and do a hobby, but it just gives us time away from the charts so that we're not sat there glued to the screens and having to continuously watch it as if we were at a 9 to 5. But it is a great representation of showing how, even with so many days off and so much time where we don't actually execute, we can still end the year with a great profit and loss. So it just goes to show you the power of trading in itself and the power of understanding the data that you have, which shows that you don't have to trade every day. You can trade every other day. Or as we can see from this data, you can trade every 2 weeks and you will still have profitable results, right? So this is a great idea and a great representation of why you should do backtesting, because not only does it show you how good a strategy is, but it can also show you things such as this, where you can figure out if a particular day of the week is better to trade than another. So as we can see, Mondays have a 67% win rate. Tuesdays have a 55% win rate. Wednesdays have a 71% win rate. Thursdays, 59%. And Friday, 54%. So our 2 most profitable days are Wednesday and Monday, 67 and 71. So you could even start to refine this strategy and remove other trading days that have a lesser win rate, such as Friday, for example, and only trade Monday, Tuesday, Wednesday, Thursday. Now, this could potentially make your risk to reward and your win rate go a little bit higher, because as traders, we must always remember to refine our edge and continuously make ourselves better. However, that is pretty much everything that we need to understand for this trading strategy, the simple rules that we have, and the simple trading plan, along with this checklist. If we follow this every single day, and once our checklist has been met and we have managed to tick off every item on there, we can then safely execute a trade, and we can sit back with the relief of knowing that our strategy has a 61% win rate. So out of 10 trades, there are going to be 6 winners and there are going to be 4 losers. And at the end of the year, we are also going to come out profitable. So on that note, guys, I hope you enjoyed this video and got some great knowledge and understanding from this video. If you did, please don't forget to leave a like, comment, and subscribe. And I would highly recommend that you go off and do some back testing of your own so that you can get a feel for how this trading strategy actually works and how you can start implementing it into your day-to-day routine, so that even if you are working a job and you start to take this alongside your job, there's a potential that in 3 months' time you can end up quitting your job because you've now spent the time learning and understanding and refining this trading strategy. So on that note, guys, I hope you have a great trading day and a great rest of the month, and I will see you guys in the next video.